Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, the percent comparison, how we find the data, and how we forecast the models in the next coming days. So back to the technical analysis. Today we're down 31 basis points on the 1 hour chart. We are approaching to positive MACD at the moment, and if we expand out to the 4 hour chart, we were oversold on Wednesday, and then we start to see a convergence in play for the 4 hour MACD. Right now we are encountering resistance on the 18 moving average, and if we expand out further to the daily chart, we're fairly close to oversold RSI, and we start to see a slight convergence in play for the daily MACD. And at the moment, if we do manage to reverse and head up higher, the next resistance that I see will be where we see the 9-day moving average, this blue line, and the 18-day moving average, this purple line. And they coincide with the price of around $1.75. So that will be our next resistance. And we also have support resting on that level as well. And since we're below support level, that now act as our resistance. And at the moment, for support, we made an all-time low today. So we can consider the $1.52 as our next support. And that is we're still fairly close to that support level at the moment. And let's see, if we were to move up higher, that price movement is roughly around 9.7% to the upside, and to the downside it is around 4% further from where we left off in this morning. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress to the 7th day, we have a 33% chance for natural gas to climb higher between 0 and 12%. And on the extreme case, we have 11% chance for natural gas to climb higher between 12 to 25%. And on the other hand, if we head lower, we have a 44% chance for natural gas to fall between 0 and negative 12%. And on the extreme case, we have a 11% chance for natural gas to fall between negative 12% to negative 25%. So let's head to the day-by-day forecast for natural gas. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. So right here we have the current trend, and below is the trend that I believe is the best match. And this trend dates back to May 29th, 2009 to August 24th, 2009. So let me point out why these two charts are similar. So what we have here on the current trend, we start off at the middle Bollinger Band. So let's just expand that. And next we proceeded to dip lower to touch the bottom Bollinger Band. And let's just mark all the instances where we touch the bottom Bollinger Band. So we have one right there and right towards the end as well. Next, we made a slight reversal to attempt to touch the upper Bollinger Band. And our second attempt is here. So we have those points right there. And let's examine the trend in question. We start to see a similar pattern here as well. Start off at the middle Bollinger Band. And then we proceeded to dip lower to touch the bottom Bollinger Band. And let's proceed to mark all the instances where we do touch the bottom Bollinger Band. So we have our second one near the very end. And we have an attempt to touch the upper Bollinger Band at this instance, and the second one right after it as well. So we have those 2 points. So what we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points on the current trend as well. So again, the model that we just examined was May 29th, 2009 to August 24th, 2009. Back then, natural gas continued to dip further, around even 22% back then. So if we examine the day-by-day probability model, it coincides with this standard deviation of 11% chance for natural gas to fall lower. In this instance, back then, natural gas fell around 22%. So let's look closely at the technical performance or the percent comparison. So what we have here is if we examine the monthly high and sort out to the current trend, right here we have the current trend. We're down roughly around 39% away from a monthly high, up 44 basis points from monthly low, down 8% from 10 simple moving average, down 8% from 20 simple moving average, and down 13% from 50 simple moving average. And if we examine the trend that we just examined, which is May 29, 2009 to August 24th, 2009, we're down 36% from monthly high, up 3% from monthly low, down 3.5% from 10 simple moving average, down 8% from 20 simple moving average, and down 12% from 50 simple moving average. So we are fairly on the trend in question. It's not down as much on the current trend and the monthly high, so do take that in consideration. This trend did make an all-time low, and again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.